Alright, hi everyone. Welcome to today's pre-market live analysis brought to you by IC Markets. Alright, before we start, let's take a quick look at the disclaimer. Please take note that this is marketing communication and does not contain and should not be construed as containing investment advice or investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs, as they carry a high level of risk to your capital, and you only trade with money with money you can afford to lose. Right. So just a simple agenda for today, as usual. Right, we'll take a quick look at the key economic events that are lined up for this week before we begin the analysis on TradingView. Right, my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, it's got a heavy calendar for this week. Right, we've got 3 central bank announcements. We've got the BOJ, the Fed, and the Bank of England. Right, and also it's also jobs week in the US as well. Right, so we've got Joel's job openings up on Tuesday, 30th of July. We've also got the ADP employment report at 12:15 p.m. GMT, Wednesday, 31st of July. And we wrap things up, of course, with the highly anticipated non-farm payrolls and the unemployment rate on Friday, 2nd of August, 12:30 p.m. Right, as I mentioned, we've also got 3 central bank announcements. Right, we've got the Bank of Japan up first on Wednesday, 31st of July. Right, usually the Bank of Japan does not specify rather the release timings of the statement as well as the press conference, but typically it should happen around 4 a.m. GMT time. So on Wednesday, 31st of July, the statement by the BOJ should be released around 4 a.m. GMT time, and the press conference is usually followed a couple of hours after. Right, and then later on that day at 6 p.m. GMT time, Wednesday, 31st July, the Federal Reserve will release its monetary policy statement, followed by Chairman Jerome Powell's press conference at 6:30 p.m. Right, so for the BOJ, they've kept their rates at the key policy rate at positive 0.1%. Now, with the yen strengthening quite significantly over the last couple of weeks, will they now continue to raise rates once more? Right, if we do see the Bank of Japan raising rates once again, this could then potentially cause the yen to strengthen. But of course, the press conference is going to be equally important as well. Right, if Governor Kazuo Ueda comes out once again with a relatively dovish outlook, right, despite a potential rate hike, right, his dovish rhetoric could cause the yen to come under selling pressures as well. Now, with regards to the Fed is very likely going to keep the Fed funds rate on hold once again. The Fed fund rate currently stands at 5.25 to 5.5%, and they're quite likely to keep rates at this level once again. Now, the press conference here by Jerome Powell is going to be closely watched as well, because despite the Fed keeping rates on hold, the outlook by Jerome Powell could be relatively dovish, or he could even be signaling very clearly that the Fed is going to move ahead with the first rate cut in September. So after July's meeting, the next FOMC meeting comes up in September, and he could be preparing markets and participants with a potential rate cut at the September meeting during his press conference. So it could be quite a dovish outcome as well here. And finally, we've got the Bank of England. The Bank of England is going to release its monetary policy report on Thursday, the 1st of August, 11 a.m. GMT time, followed by Governor Andrew Bailey speaking or delivering his press conference at 11:30 a.m. on the same day. Right, so the Bank of England is now very likely going to move ahead with its first rate cut. Right, so the Bank of England is likely to take the first step ahead of the Federal Reserve and make that 25 basis points rate cut to bring the official bank rate down to 5%. Right, so we could see the pound come under pretty heavy selling pressures on this day as well. Now taking a quick look at ADP and non-farm payrolls, right? So ADP is going to be released on Wednesday, 12:15 p.m. GMT time. We can see the previous month's figure coming in at 150,000, and the estimate for June is at 164. Right, it's also estimate for July. So in June, 150,000 jobs were added. However, this was the third consecutive month where job creation slowed, and it was not broad-based as well, right? So had it not been for the leisure and hospitality sectors, June would have actually registered a downbeat month. That means June would have actually showed jobs being lost in the US in the private sector, right? Had it not been for leisure and hospitality. So there are some concerns that job growth or job creation is now starting to slow down in the US, and also we can see it's concentrated in a couple of sectors as well. So this July's forecast is coming in at 164,000, and we can see that the 12-month average for ADP employment report has been coming in at 162,000. So the last couple of months, May and June, we are starting to see job creation slow down, and we can see that the last couple of months it's been coming in under the 12-month average as well, right? So this month's July's estimate of 164,000 seems to be in line with the 12-month average, and yeah, so but however we can see job growth being slowing down as reported by the ADP employment report. Now taking a quick look at BLS as well, right on the left here we have the chart for unemployment rate. We can see the unemployment rate has climbed for 3 consecutive months now. It was at about 3.7 or 3.8% in March of this year, and it's come up as high as 4.1%, right? So overall job gains for non-farm payrolls have occurred mostly in the government, healthcare, social assistance, and construction sectors. Once again, looking at the previous month's non-farm payrolls data, right? About 206,000 jobs were added in June, right, which was slightly higher than the forecast. However, April and May's figures were revised downwards quite significantly, right? So May's data was initially at 272,000, that's around here, right? May's data was initially at about 272,000, but then it was revised downwards down to 200 and let's see, what is this, about 211,000, and at the same time, oh sorry, 218, yes, revised down to 218 from 272, and at the same time April's data was also revised lower down to 108,000. So April's data was about 165,000, that's probably around here, and this was also revised lower as well. So you can see here, despite the June's figure of 206,000 coming in slightly higher than the forecast, we can see April and May's data were revised lower, right? So that means when downward revisions take place, it signifies less jobs were added to the US economy than originally expected, right? And this is also showing a slowdown in job creation. So you can see here, since the last 3 months, April, May, June, job creation has been coming in under the 12-month average of 222,000, right? So you can see job growth in the ADP by the ADP and BLS are showing a potential slowdown in hiring in the US labor market, and at the same time, of course, we are seeing the unemployment rate move higher as well. So there are some growing concerns that the labor market or job growth in the US is starting to slow down, and that of course could cause bring the Fed to move ahead with its first rate cut at September's meeting, and that's also quite likely going to see the value of the dollar come under pressure as well. Alright, now let's dive into the charts on TradingView. Alright, as usual, we'll start the analysis with the dollar index, and we'll make our way down through most of through the major currency pairs. We look at the commodities like oil and gold as well. Cover the indices too. Then of course, should there be any requests, please do drop them in the chat box early, and I'll be more than happy to go through the analysis with you, right? Right, okay, so let's start the analysis with the dollar index. Right, I'm on a daily time frame here. So as you can see here, over the last since 18th of July, since mid-July, the dollar index has sort of stabilized at around 103.70 and has retraced higher, and it's sort of like just consolidating around 104.40. Right, so if you look at it last week, right, it was there was no clear direction for the dollar index, right? There was, like, unlike what we saw at the end of June till mid-July, we saw a very clear downtrend, right? We saw a very clear downtrend, which was broken, as well as a nice bearish channel in place previously, right? There's a nice bearish channel in place here, and this was finally broken. Right, there was a bearish channel in place previously, and this was finally broken on 19 July, right? There's a breakout through the upper trend line of the bearish channel back then, and since 19 July, 20th July, 22nd July, dollar index has sort of just consolidated here. So it's actually been going nowhere, roughly, right? There's no clear downward trend, or there's no clear upward trend. It's just been moving sideways and consolidating over the past 1 week here, right? So we could see the dollar come under selling pressure once again this week. Remember, we've got the Federal Reserve up, along with the US jobs data as well. So we do see another round of slower job creation as reported by the ADP and BLS non-farm payroll reports. We could see the dollar come under pressure, and that could mean it could once again drop back towards this pivot here at 103.68, right? And at the same time, we've also got the FOMC meeting coming up on Wednesday, right? So should we do we are not expecting, markets are not expecting the Fed to cut rates at this current meeting. However, Chairman Jerome Powell could give the very first clear signal that the Fed is ready to move ahead with the first rate cut in September, and that may be enough for the dollar to come under pressure once more. So right, so this pivot level here, or rather this level here at 103.69 has been identified for the pivot for this week, right? So we're expecting dollar index to quite likely to drift lower here over the first couple of days, and then as US jobs data starts to be released along with FOMC meeting, that's when we may see the dollar index really moving in a with much higher volatility as well. So level at 103.69 has been identified as a pivot level for this week, right? And this is where the dollar index found strong support on Wednesday, 17th of July, and the 18th of July as well. Now, this level here also has the presence of a Fibonacci extension at around 127%. This extension level was found by running a retracement, so we started retracement from here, 4th of June, going up to which is the high, all-time high, the absolute high is here on 26th of June, and the key extension levels sit at 137 and 161%, and we can see here the 137% extension level lies quite close to the pivot here, and at the same time we can see the 161% extension level aligned very well with the first support, right? The first support is at 102.76, right? We can see very recently, or not recently, we see in March there's a nice swing low here that took place in mid-March as well, right? As the dollar index was pulling back from 104.30, it found support around 102.70, stabilized for about 4 or 5 days before rebounding higher. So it's very clearly a nice swing low support here that took place in mid-March. And if we go back a little bit further, we can see price running into resistance here in the beginning of January, the first week of Jan. Price, as it was rising higher, it formed a nice swing low here at the end of December at around 100.90, and as it retraced higher, it ran into resistance here first at 102.73, and after which it broke out, and then it formed after breaking out, it formed a nice pullback before finally bouncing higher. So this creates an overlap level here. So we have a combination of an overlap level and a swing low support to help us identify or to help us signify that this is a major, quite a significant level here, and which is a significant support level, which we are using to identify as the first support. And of course, we also have the presence of 161% Fibonacci extension level that adds further significance to this level here. So that's how the first support has been identified, right? It's a combination of a swing low support in mid-March, an overlap level in January, as well as the 161% Fibonacci extension here, right? Okay, now looking at resistance, right? When I look across this level at 105.15, it looks like a pretty decent overlap level as well. We see price making a little pullback here in mid-June to 105.20 before bouncing higher, and then as it broke underneath this level here in 8th of July, it retraced a little bit higher, but stalled around 105.20 once again before resuming the downtrend here. So this creates a nice overlap level that also has the presence of a 61.8% retracement. So this Fibonacci retracement was found starting from here, started the retracement from here, 26th of June, and of course going down to the low here on the 17th of July, and we can see the 61.8% retracement aligned very well with the overlap, which is the first resistance at 105.15. Right, okay, so we can get rid of this bearish channel as well. I just wanted to highlight this bearish channel to indicate that previously dollar index was in a strong downtrend from end of June till mid-July. Then we saw a bullish breakout occurred on 19th of July, and last week dollar index was pretty much going nowhere, right? There's no clear trend, there was no clear downward trend or upward trend. It's just been consolidating and going sideways last week as well. However, with jobs data and the FOMC meeting lined up this week, we are quite likely to see dollar index drift lower, especially if we see further slowdown in the US labor market as we see as in what could be reported in the ADP and non-farm payrolls reports. All right, so take note. So these are the key levels for the dollar index for today, or for this week rather, right? And looking at the Ichimoku cloud, right? Okay, once again, there's no clear trend as well. On Ichimoku cloud doesn't really tell us anything yet, except for now, dollar index is trading underneath the cloud as well. So there is some slight bearish momentum, but it's not very strong. Right, and up next we've also got we've also got the Bank of Japan, right? So Bank of Japan will be releasing its monetary policy statement as well. So let's take a look at the dollar yen. And as you can see here, since mid-July, after stalling at around 161.80, the dollar yen has reversed quite sharply, and it dropped as low as 151.94 last week. So part of this this downward move here can be attributed to intervention actions by the Bank of Japan, right? Just like similar to what we saw in the first week of May. So back then, the Bank of Japan had also intervened in the open markets quite aggressively. So they were selling their foreign holdings, right? So basically they're selling US dollars, US treasuries, and using the sales proceeds to buy back the Japanese yen from the open market. So when they're buying back the Japanese yen, the yen strengthens, and this will cause currency pairs like the dollar yen and all the other yen crosses to fall quite significantly, right? So as the yen is strengthening, currency pairs like the dollar yen will actually drop as well, because remember, the yen is the denominator in this currency pair here. So similarly, this is what we saw in mid-July as well. The Bank of Japan had once again intervened quite strongly in the open currency markets, which caused the yen to strengthen quite significantly, which in turn then causes the dollar yen to drop quite significantly as well, right? However, we've seen the dollar yen sort of stabilize at around 153 last week, which is around the same level where this currency pair stabilized as well, following the previous intervention actions by the Bank of Japan, right? So this is how the pivot level has been identified for the dollar yen for this week, right? It's a nice swing low support that took place. There's a nice swing low support, right, that took place here in the beginning of May, right? There's a nice swing low here, and this is once again where the dollar yen looks to have stabilized as well, right? It's quite a significant level here. So that's how the pivot for this week has been identified, which is at 152.91. Now, we've also run a Fibonacci retracement, right, starting from this swing low here on 28th of December 2023, going up to the high here of this year at 161.95. We can see that the 38.2% retracement level aligns pretty well with the pullback support at 152.91. So take note, the pivot is a pullback support level that also has the presence of a 38.2% Fibonacci retracement here, right? So when we are looking at this chart along with the RSI and the stochastic oscillator, right, we can see that they both seem to be highlighting oversold conditions, right? It's both seem to be highlighting oversold conditions, right? So which is something that we could potentially see the dollar yen stabilize and perhaps stage a minor rebound, right? So it might not be a very strong bounce, but we are quite likely to see the dollar yen stabilize and stage a minor rebound this week, right? This is something similar to what we saw here as well in the first week of March, right? We see RSI dropping down to about dropping down as low as 33.76, and of course we see RSI, a stochastic oscillator, drop below 20 as well, right? And here as well, something similar. We see the RSI showing oversold conditions along with the stochastic oscillator, which is where once again the dollar yen stabilize as well, right? So we do see some technical setups indicated by the RSI and stochastic oscillator. Remember, these two are momentum indicators, and once again they do seem to be suggesting oversold conditions. So if they're suggesting oversold conditions, it means the dollar yen is quite likely to stabilize, as what we saw at in mid-December, in mid-March, and it's something that we're potentially seeing now as well, right? So take note, we could see the dollar yen stabilize around the pivot, which is at 152.91, and perhaps stage a minor rebound this week. Right, and what about support? Okay, we're looking at the next major support for dollar yen, right? Maybe we can argue there's probably an overlap level around here, right? Perhaps we can see there's some, right? Maybe there is some like overlap level here at 150.88, right? Perhaps there's another support level here, but I think where I do see a strong support is at this pullback here, right? There's a little pullback here that took place on 1st Feb, and we see a nice swing low here taking place on 11th of March as well, right? So nice swing low support here, nice pullback level here at 146.43, and we also have the presence of a 78.6% Fibonacci retracement underneath it here. So this is quite likely where we may see real significant support for dollar yen should it break lower, and this overlap level here, right, might offer some support as well at 150.88, but I think the major support is going to be at 146.43 here. And of course, wrapping up with resistance, right, we see the dollar yen sort of stabilizing here at in mid-July, right, start stabilizing here at around 157.91 before dropping lower, and we also see it tried to retrace higher here, right? It tried to retrace higher here and on 19th July, but it failed and reversed to continue the downtrend here. So this is a nice decent overlap level here that also has the presence of a 61.8% retracement. So this retracement was found starting from this high on the 3rd of July, going down to the low of course here on 25th of July. We can see the 61% retracement aligned pretty well with this overlap level here at 157.89, which has been identified as the first resistance. right? And also we can probably identify a pretty decent bearish channel as well for the dollar yen here, right? I think we can identify a pretty decent bearish channel as well, right? And this is also something to take note of as well. So if we do see a nice clean break above the upper trend line of this bearish channel, right, it may signal a potential bullish breakout, and we may see dollar yen climb a little bit higher as well. So take note, it is trading at a pretty significant support level here, which is the pivot at 152.91. It is currently still trading within a bearish channel, but any break above the upper trend line could signal uh, further upside move. And at the same time, remember, we are seeing RSI and stochastic oscillator indicate oversold conditions, similar to what we saw in on 6th of May, 11th of March, and also on 29th December of last year. Right? We're seeing a similar technical setup as well, which does seem to suggest that dollar yen could stabilize around the pivot here and reverse to stage a minor rebound. Right? Okay. Then let's go take a look at the pound, right? The British pound, US dollar, also known as the cable, right? Since we've got the Bank of England coming up this week, right? The Bank of England is also going to release its monetary policy statement on Thursday, and they are widely expected to cut the official bank rate by 25 basis points to bring it down to 5%, right? So we can see that we could, in the first half of the week, all right, yeah, in the first half of the week, we could see uh, this currency pair probably retrace a little bit higher, right? We saw a very strong uptrend, upward move from in the first 2 weeks of July, and then last week we saw the cable pull back. However, maybe it could continue up towards the level here, or rather, actually, wait. Actually, I'm going to we may actually see it. Actually, I see a pretty decent pullback level here, right? I think we are quite likely to see cable pull back a little bit further, right? We could potentially see it pull back a little bit further, and then come up here towards this pullback resistance here. Right, and also we've run a retracement from here, and then there's one more retracement I think I would like to draw now as well. I think, yeah, I see another nice retracement that we could potentially draw from here. Okay, we drew one retracement from here, 2nd of July up to the high here on the 17th. I believe it's a 50% retracement that we can use. Right, so this 50% retracement aligns pretty well with this pullback support level here that we've identified as the pivot here. Let's look at it on the Ichimoku cloud, right? We can see that cable is still trading above the green Ichimoku cloud. Remember, the cloud is green in color. It highlights the bullish momentum, and with price still trading above the cloud itself, right? We may see cable pull back towards this pivot level here at 1.2817, which also is a pullback level that has the presence of 50% retracement. We could potentially see this currency pair stabilize here around the first week of or during the first half of this week, and maybe stage a minor rebound as well. But remember, come Thursday, we could potentially see cable come under heavy selling pressure. Of course, it's going to be a very volatile period for this currency pair as well, because remember, on Wednesday we have the Federal Reserve up first, and then we have the Bank of England a few hours later, right? So it's going to be a very highly volatile period for this currency pair. So we may see it potentially drift a little bit lower first, find support around the pivot, stage a minor rebound, and then we could then once again see the cable reverse and drop lower following the Bank of England's monetary policy statement and press conference, right? So whatever the outcome by the Fed and the BOE, we are very likely to see this currency pair come under significant or this currency pair to face very extreme volatility in the second half of this trading week, right? The resistance has been identified at 1.308, right, or 3008, which is a pullback resistance level that's occurred in mid-July. Right, we can see here, right, we've got the BOE interest rate decision on 1st of August, and then of course that's at 11 a.m. GMT time, and of course prior to that we have the FOMC meeting as well. All right, now with regards to support, right, there's a nice pullback support or swing low support that's taken place here on 26th of June, right? We see a nice swing low here taking place. Right, so that's how the first support has been identified at 1.2615, which also has the presence of a 61.8% retracement underneath it. So this retracement was found, of course, starting from this swing low, 22nd of April, going up to this pullback resistance level here that occurred on 17th of July. So we can see the 61.8% retracement sitting slightly underneath this swing low support, adding further significance to this level here. So take note, it's going to be a very volatile period for cable in the second half of this week. Yeah, we are likely to see very strong wild swings. We're likely to see wild swings experienced by this currency pair due to the Fed and the Bank of England as well. All right, okay. And we've covered the dollar index, dollar yen, the cable. These are the two currency pairs and the index that are going to be highly impacted by this week's central bank interest rate statements. Right, now let's move on over to the commodities. We'll take a look at gold, and then we'll take a look at oil as well before moving on to the indices, and then we'll return to the currencies once more. And of course, should you have any requests, do drop them in the chat box, and I'll be more than happy to go through the analysis with you. All right, so looking at gold prices here, right? So XAU USD is the instrument that tracks spot gold prices here, and we can see gold has made an all-time high. Right, gold made a new all-time high, intraday all-time high on 17th of July, right, at around $2,483.68 per ounce here. So this is a new all-time high for gold, that intraday all-time high for gold that took place on 17th of July. Right, so if you look at gold prices here, it is sort of like consolidating, or previously it was sort of consolidating around this level here, right? We see it roughly, it was consolidating between $2,295 per ounce and around $2,435 per ounce here, right? Roughly from 16th of April till about 10th of July, right? So just moving sideways, right? There's no clear uptrend. We saw a very nice bullish uptrend here in March and April, after which price was consolidating. It wasn't a very narrow range. It was still a pretty wide range that it was trading, right? Bouncing off $2,290 on the lower bound, and stalling at around $2,330 per ounce on the upper bound here. But before, right, and then we finally saw it break out here in mid-July to make this new intraday high at $2,483 per ounce here. Okay, then right, so with gold prices making an all-time high here, so this is where the pivot has been identified, right? So we've seen gold prices stabilize around here, right? We see gold prices stabilize here. It could potentially see it climb up towards the pivot. Do we see anything here? No. Right, we could see gold prices perhaps come up towards the pivot here, right, and stall before pulling back as well, right? Because if we do see the dollar sell off, remember, right, we have the ADP non-farm payrolls report. We've also got the Fed as well, so we may see the dollar come under pressure. If we see the dollar come under pressure here and pull back towards this pivot here, we could then see gold prices rise up towards its own pivot close to the all-time high at $2,483. right? So take note of that. And then with gold making a new intraday high on 17th of July, but how could we possibly identify the next resistance level? In this case, we're going to rely on Fibonacci extension levels here. So we're going to find these extension levels by running a retracement. So we started this retracement from here, 20th of May, and we ended it here at this low on the 7th of June. We can see that there's a 127% extension level that aligns quite close to this new intraday all-time high, and we can see the 161% extension level at 2550. So that's how the first resistance for gold has been identified. Remember, we have nothing in the past to reference. There's no other swing high resistance, overlap, or pullback resistance that we can reference. This is the all-time high here, so beyond this level we need to rely on tools such as Fibonacci extensions or Fibonacci projections to help us identify the next potential resistance level. So that's how the first resistance at 2550 has been identified via this Fibonacci extension at 161%. And at the same time, we can also see the Fibonacci extension at 137% aligned pretty well with the intraday all-time high here on 17th of July. Okay, right. And what about support, right? As I mentioned here previously, right, gold was finding support at this lower bound here at 2386. So that's where the first support has been identified, and we've also run a retracement. We've run a retracement from here, this low on 14th of February, going up to this all-time high here, 17th of July. We can see that the 38.2% retracement level aligns pretty well with the first support as well, which is the pullback support here. Right, so if you're expecting dollar index to drift back towards the pivot here, right, due to a combination of slower jobs report, slower job creation by the ADP and non-farm payrolls, along with potentially dovish Fed, right, we are likely to see the dollar index pull back, and that may be enough for gold prices to receive strong tailwinds and push higher towards the pivot here as well. Right, you could push higher towards the pivot and maybe make a small pullback after that as well. All right, okay. Now looking at oil. So looking at crude oil here. So the instrument that we have here is XTI USD. So this is the instrument that tracks WTI crude oil futures, and we can see crude prices have come under strong selling pressures since the beginning of July. Or since the first week of July, right? We see XTI USD hitting as high as $84.86 per barrel here, before stalling and reversing quite sharply to drop as low, to drop under $78 per barrel here. Now the downward action in crude oil prices has been pretty strong, so we may see a potential bearish breakout take place today as well, right? This week, sorry, right? We are also starting to see maybe a sort of bearish channel. Perhaps there's a pretty decent bearish channel, I guess, that we can sort of identify as well here. Right, we can see that this commodity is trading down in this channel, and at the same time we see it cross into the bearish Ichimoku cloud and make a crossover, or as it's breaking under this Ichimoku cloud as well, right? Remember, when sometimes price crosses through the Ichimoku cloud like this, we may see further downside action as well, and we could potentially see crude prices make a bearish breakout and drop lower. Right, for now we don't see like we see RSI here and stochastic here, both indicating oversold conditions just yet, but over here, right, we don't see RSI just yet. So maybe, right, so maybe we still we see further downside action for XTI USD, right now. The last time we saw significant oversold conditions for this commodity was in 4th of June, right? We see price making a nice swing low here, with RSI dropping as low as 28 and stochastic probably coming as low as 6 here, right? So both of which indicated oversold conditions. We saw XTI USD stabilize before moving higher, but for now we still see RSI at around 37 and stochastic at around 16. Maybe we can see further downside action here for this commodity, and we could see XTI USD potentially make a bearish breakout today and continue this and extend this bearish channel here. Right, okay, so what about the pivot? The breakout level is the pivot has been identified as a potential breakout level, which is where XTI USD has found support, right? We see it finding pretty decent support here, right? We see XTI USD as it was falling quite sharply in end of April, right? And it stabilized in May, right, at around $77.40, right? Stabilizing here for a few days before finally breaking lower, coming up, and then stabilizing again before going higher here. So we see a nice pullback support level here taking place and in the second half of May, and a little pullback here in mid-June as well. So this is the potential breakout level. So we may see XTI USD make a potential bearish breakout today. It is also trading within a pretty decent bearish channel as well, and we are seeing the crossover take place over here as well. We're seeing the crossover take place through the bearish Ichimoku cloud, and we may see further downside action for this commodity here for today, for this week. And for support, and we can see quite clearly, right, we see a nice swing low support here taking place in beginning of February this year, and another swing low support taking place here on 5th of June, right? So this is a very significant multi swing low support level here that also has the presence of a 78.6% Fibonacci retracement, right? So we have the retracement starting from here, this swing low on 13th of December 2023, going up to the high here. This is the high for 2024 on 5th of April at around $88 per barrel. And we can see the 78.6% retracement aligned very well with this multi-swing low support here at $72.31, which has been identified as the first support. Now what about resistance? We can also run the Fibonacci retracement starting from this high. Starting from this high here, 5th of July, going down to the low here on 25th of July. Let's pull up all the fibs. And we can see there's a pretty decent pullback resistance level here at around a 50% retracement. So we can use this level here to identify as the first resistance. A nice pullback resistance level at $80.81. That also has the presence of a 50% retracement. So that's how we've identified the first resistance for XTI USD for this week. Alright, okay, so we've covered the commodities as well. Let's take a look at the indices, right? We've still got time. Let's take a look at the indices before coming back to the currencies. All right, so looking at US 500. So the US 500 is the instrument that tracks the S&P 500 futures. Now, if we look at it on the together with the RSI and stochastic oscillator, right, we see here in mid-April we saw the RSI drop as low as 31. We also see stochastic oscillator dropping under 5, right? It did signal a nice reversal or support area, right? It indicated potential oversold conditions, like a high probability oversold conditions, and this is where we did see US 500 stabilize at around 4,970, stabilizing around this level before resuming the uptrend here. For now, we don't see that happening just yet, right? We don't see that happening just yet, right? So perhaps we could see any retracement to the upside, right? Any retracement to the upside for US 500 is a potential barrier. We may see it retrace up towards the pivot here at 5,561, stall, and then reverse to drop lower as well. Right, for now, we don't really see significant oversold conditions based on the RSI and stochastic oscillator indicators, right? So we are not seeing a potential bottom just yet. Maybe at some point this week, we may see the RSI indicate oversold conditions along with the stochastic, and that's where we may potentially finally see US 500 stabilize before reversing to go higher. But for now, we don't see this technical setup just yet. So perhaps this instrument is going to retrace a little bit higher into the pivot, stall around here, and then reverse to resume the downtrend. And also looking at it here, then I can see a pretty decent bearish channel as well. Remember, this is the all-time high for US 500, intraday all-time high that was set on 17th of July. Right, I also see now a nice bearish channel for this instrument as well. Right, so it's trading in a pretty decent bearish channel. So we may see it rise up, retrace a little bit higher towards the pivot, stall around 5,561, and then before reversing to resume the downtrend. Now this pivot level here is a small pullback resistance that took place on 23rd of July, which also has the presence of a 61.8% retracement. So we found this retracement here starting from the all-time high on 16th of July, going down to the low of Thursday. You can see the 61% retracement aligned pretty well with this pullback resistance level here at 5,561, which has been identified as the pivot. Now, first resistance is very clear, right? First resistance, of course, is simply going to be the all-time high at 5,673.33. So this is the all-time high here. And what about support, right? We see a nice pullback support level taking place, or price action taking place here on 31st of May, right? As US 500 was rising, it pulled back, it dipped once on 23rd of May, then it dipped again on 3rd of June before finally bouncing higher here. So we do see a pretty decent pullback support level at 5,236, which also has the presence of a 61.8% retracement, right? So this retracement was found from here, starting from here, 19th of April, this low, going up to the all-time high, 506,073, and we can see the 61.8% retracement aligned very well with the pullback support here. Right, so these are the key levels for the US 500. So take note, it's beginning to, or it started to trade within a bearish channel. We may see it retrace a little bit higher towards the pivot, and then perhaps reverse to drop lower as well. Right, but for now, and of course, any break above the upper trend line of the bearish channel, right? Any potential break above the trend line could then signal a nice bullish continuation, right? Remember, this instrument is still trading above the bullish Ichimoku cloud. It can also find support within this bullish Ichimoku cloud here. So we may see this currency pair, this index move a little bit lower. But remember, we could see it retrace up towards the pivot as well here. Right, okay, so let's see, we've covered that. Right, are there any requests? Right, if there are no requests for any other currency pairs, then let's just take a look at the Aussie. Right, let's just take a look at the Aussie as well, and then we'll see this, then we can recap what we've covered so far. Right, looking at the Aussie, we see it in a very strong bearish downtrend here. We see it making a high of about almost hitting 68 cents in mid-July before reversing very sharply to fall. This has been like I think 3 consecutive weeks of decline, and if you look at it on us, 2 strong weeks of decline here. So you can see here, yes, mid-July and last week. So very strong decline in the Aussie, right? This is one of the most recent strongest pullback of 2024 so far, right? Even here we saw in April as well, very strong pullback over 2 weeks, and this is something that we see here that has occurred just recently as well. Now, with the Aussie falling so sharply, right, I see the next major support for the Aussie at this pullback level here. Right, there's a nice pullback level here taking place on at the end of April, so we are quite likely to see the Aussie pull back even further, and this pullback support level also has a presence of a 78.6% retracement that has been identified as the pivot for this week here. So this retracement was also found, right, starting from here, this swing low on 19th of April, going up to the high here on 11th of July. We can see that, oops, hang on, what is this? Oh, there we go. You can see that this 78.6% retracement aligned quite close to the pullback support level here, adding further significance to the pivot. Yeah, so that's how the pivot has been identified, and the first support at 63.49 is actually another strong swing low that's taken place here. Okay, we see a nice swing low taking place here in November of 2023, a very nice swing low bounce off this level here. So that's how the first support at 63.49 has been identified. We have a nice swing low support that took place in mid-November. And of course resistance, right? We ran a Fibonacci retracement starting from this high on the 11th of July going down to the low of Thursday. We can see that it's the 38.2% retracement aligned pretty well with this pullback level here. So this level here at 66.35 was previously a pullback support level back at the end of June, and of course now with price trading underneath it, it could potentially function as resistance as well. So that's how the first resistance has been identified for the Aussie. So we do see this currency pair potentially falling, continuing to slide lower, right? It's been a strong bearish momentum. We may see it fall even lower as the week progresses. However, take note that it is also seems to be the stochastic oscillator and RSI also seem to be highlighting oversold conditions, right? RSI dropping as low as 28, stochastic coming as low as 5, dropping under 6. Perhaps we're starting to see some strong support area close to the pivot here as well, right? Remember here in mid-April we saw RSI drop as low as 34, stochastic coming as low as 8, indicating potential oversold conditions. We did see the Aussie stabilize at around 64 cents before reversing to bounce higher. So maybe we're starting to see some potential stabilization for the Aussie close to the pivot here. It may drop even lower, but it's quite likely to stabilize around here, find a nice floor before perhaps staging a potential rebound as well. Maybe not a strong rebound as what we saw in early May and April, but maybe some minor decent rebound here as well, right? We do see oversold conditions highlighted by the RSI stochastic oscillator. It's quite likely we could see Aussie stabilize around the pivot at 64.70. All right, so these are the key levels that we have for the Aussie today, right? So we'll just wrap up with the dollar index. Okay, right, we've got 3 central bank announcements lined up this week. We've got the Bank of Japan, we've got the Fed, and of course we've got the Bank of England, and it's also jobs week in the US as well. So we've got ADP non-farm payrolls, ADP employment report, BLS non-farm payrolls and unemployment rate, as along with Joel's jobs data as well, right? So it's a very heavy calendar, and we're likely to see strong high volatility for the dollar index. for the dollar yen, and of course for the cable as well. Now, if we do see another month of slower job creation, as reported by the ADP and BLS employment reports, that could cause the dollar to come under pressure. So we could see the dollar pull back from 104.32 and drop down towards 104, and maybe drop down, break under 104 as well, and head towards the pivot at 103.69. Right, so we're likely to see the dollar come under pressure this week due to possible slower job creation, and also due to a potential dovish Fed as well. Right, the Fed is very likely going to keep rates on hold at 5.5% once more, but Chairman Jerome Powell could communicate a very convincing signal, or very high signal, that the Fed is ready to move ahead with the first rate cut in September, and that may be enough for the dollar index to sell off. Right, okay, so coming back to the slides. Right, so this is the calendar for this week, and take note, I'm on GMT time here, so there's quite a few. It's a very heavy calendar, but of course attention is going to be drawn to the Bank of Japan on Wednesday, 31st of July. The statement should be released at around 4 a.m. GMT, followed by the press conference about a couple of hours later. We've also got, of course, the Fed dropping its monetary policy statement at 6 p.m. GMT, where they are expected to keep the Fed funds rate on hold once more at 5.5%. However, take note, Chairman Jerome Powell's press conference at 6:30 p.m. is going to be very market moving as well. And if he communicates a very dovish outlook, we can expect the dollar index to come under heavy selling pressure. And of course, and before that, we've also got the ADP non-farm employment report at 12:15 p.m. Wednesday, 31st July. Right, and then finally, the Bank of England is the last central bank to make its announcement. They are widely expected to cut its official bank rate by 25 basis points to bring it down to 5%. Right, so the statement is going to be released at 11 a.m. GMT, followed by Governor Andrew Bailey's press conference at 11:30 a.m. So if we do see this rate cut take place, along with a dovish communication by Governor Bailey, we are likely to see the cable come under pretty heavy selling pressures as well. And finally, we've got the BLS employment report, where we will get the latest update on the non-farm employment change, as well as unemployment rate. So unemployment rate is expected to stay unchanged at 4.1%, but we are only expected to see jobs growth of about 177,000 for the month of July. Right, 177,000 is much lower than the 12-month average as well. So looking at ADP report has slowed. Right, ADP job creation has slowed for the third straight month. It's not only has it slowed, it is not broad-based. It's actually just been concentrated in leisure and hospitality. And if it wasn't for these two sectors, ADP's report in June would have reported a downbeat month, meaning we would have actually seen job losses reported in June were it not for the leisure and hospitality sectors. Right, we can see here job creation as reported by the ADP has slowed down quite steadily, and the last 2 months have also come in under the 12-month average of 162,000. Now we can see the unemployment rate rising from about 3.8% is risen now for 3 consecutive months to come up as high as 4.1%, and we also see slower job growth as reported by the BLS non-farm payrolls as well. Right, we saw April's number revised significantly lower. This was previously about 165,000. Now it's dropped down to 108,000. May's figure of 272,000 was now revised lower down to 218,000 as well. So downward revisions signal weaker job growth, and we can also see it is coming in. The last 3 months have also come in under the 12-month average of 222,000, and this month's forecast is only for 177,000 here. Right, so for July, we are expecting job growth to come in around this level here. So you can see here this potential slowdown in the pace of hiring in the US, right, which signals saturated labor market. We're not seeing job losses just yet, but slower hiring indicates potential saturation in the labor market, and that could also in turn have negative impact on the value of the dollar, right? We're quite likely to see the dollar face slower jobs reports functioning as a bearish catalyst for the US dollar. All right, so that's all that we have for this session, right? Thanks everyone for tuning in, right? Do look out for all upcoming webinars by IC Markets for the rest of this week. We've got a combination of live analysis and educational topics, and of course, do take note, it's going to be a very heavy calendar this week. We've got 3 central bank announcements along with US jobs weeks as well, right? All right, thanks everyone. Right. Thanks everyone, and we'll try and all right. If you have missed out on today's session, do tune in to the next live analysis session later on today. That's going to be at 9:30 a.m. GMT time, where we can cover the other instruments as well. Right. Okay. Maybe right. I'll just do a quick one. You guys, let's see. Let me see this. We can just quickly cover Ethereum. I'll just quickly cover Ethereum here. Right, okay, so we can see here after running the resistance last week at around 3,500, Ethereum stalled around this level and has pulled back. It's sort of like in between these two ranges here, right? But we may see it potentially resume the uptrend, coming up towards. Oh, sorry, we can see it drop lower first. Sorry, we might likely to see Ethereum drop lower towards the pivot, and then stage a rebound here. And then we can also see there's a 61.8% retracement close to the pivot here. And we see a 61.8% Fibonacci retracement close to the pivot here. And we also see a nice overlap support level here at 2,135, right? So we are quite likely to see Ethereum pull back further towards the pivot, stabilize here, and stage a rebound. And this first resistance here is a pullback level resistance that also has the presence of a 61.8% retracement. Alright, Motorhead. Okay, we'll do a quick check on CAD JPY as well. Alright, Devil, I hope you got the key levels for Ethereum for this week as well. And let's just wrap up the session by quickly looking at Canadian dollar JPY. Right, so similar to dollar yen, right? Similar to dollar yen, we are seeing oversold conditions being highlighted by this RSI and stochastic oscillator, right? It's something similar to what we saw here in May, right? So we do see even back then CAD yen stabilizing around 108.70 in 11th of March, stabilizing around 111.70 in 2nd of May, and perhaps now we're starting to see it stabilize around 110 as well, right? We're quite likely to see it stabilize around 110 as well. We see these two momentum indicators highlight potential oversold conditions. So oversold condition means we are likely to see price stabilize and make a bullish reversal here. And let's just quickly identify the key levels here. We can run a retracement. We have a 61.8, so I think we'll use 61 and 78.6. So right now it's around the pivot here. So this week's pivot for CAD yen should be around 111.04, and I think the first major support should be around here. Take note, we've got the 61.8% retracement, so let's just keep 61%. And we can also run a retracement starting from this high on 10th of July, going down to the low here on the 25th. Let's pull up all the fibs. I see a nice pullback resistance level here. I see a nice pullback resistance level here at around 113.14, which is close to the 38.2%. So these are the key levels for CAD yen for this week as well, right? And let's just keep 38% here. So perhaps we are likely to see this currency pair stabilize around the pivot and stage a minor rebound, right? We are likely, you could see stage a minor rebound because we do see, remember, on a daily time frame, stochastic and RSI. Oh, sorry, not this one here. We are starting to see oversold conditions here, so we could potentially see CAD yen stabilize at around the pivot level here and stage a rebound. All right, so that's all. That's all we've got for this week, right? Thanks everyone for tuning in to today's live analysis session, the pre-market live analysis session. Do look out for all upcoming webinars by IC Markets for the rest of this week. We've got another live analysis session coming up later on today at 9:30 a.m. GMT. So do tune in for that and for the other sessions for the rest of this week as well. All right, thanks everyone for tuning in. Wish you all a great trading week and catch you all in the next webinar. Thanks everyone. Oh wait, and before I go as well, I'm going to truly I'm just going to launch a poll as well. Truly appreciate it if you guys could give your feedback with regards to today's webinar. I'll just quickly launch a poll as well. Just give me a quick second. Okay, just here we go. Alright, truly appreciate it if you guys can give your feedback with regards to today's webinar as well, right? And once again, thanks for tuning in, and do look out for the next session, the next live analysis session at 9:30 a.m. GMT time. Right, thanks everyone. Look forward to your feedback, and yeah, wish you all the best in your trading journey for this week. And do look out for those 3 central bank announcements as well as the US jobs reports as well. These are all going to be highly volatile and market moving events for currency markets as well as for gold and potentially for equity markets as well. All right, thanks everyone. And Nick, if you missed this session, don't worry, it'll be up on YouTube as well, so you'll be able to watch it on YouTube. And of course, do tune in later on today at 9:30 a.m. GMT for the next live analysis session as well. All right, thanks everyone. Take care. Have a great trading week, and catch you all soon.